All right. Good morning. Good morning, everybody. We're going to go and start as we normally do economic news. Now, something I said yesterday generated some comments or some questions. When you go to Market Watch here and you're looking at the things that we have on the agenda, Thinkorswim doesn't always have everything that we could see today, right? This is not a full list of economic events for the day. Sometimes it is, and sometimes it's not. And I don't like that gray area, right? That ambiguity of trying to decipher, is this everything or not? So, never take it on face value that this is everything. For an example, the president is going to be talking today at around 12:30. I believe it's 12:30. That's not on this list. This is an automatic generated list from a company called Econoday. They have their own website. Thinkorswim reaches out to that website and gets the information for the day. There's a lot of places that you can go. I don't think there's really you know, a, a, a better one than others. Um, I like FX Street. The only thing I'll say about FX Street is do not give them your freaking email address. Don't sign in. Don't create an account. Just go over, use the calendar, and leave again. Because these guys will bomb your email address nonstop, right? It's almost harassment. You don't need an account though. You can see I'm not logged in. I can come over and I can see exactly what's going on. And they do a really good job. And I don't trust just this site either. Look at both of them. Look at Thinkorswim, look at this, and just kind of ask, what do we got on the books today? Right. So just wanted to get that out there because somebody heard me say, I don't trust Thinkorswim when it comes to those. Um, it's just, this is more of a legacy, right? Things that are on the books that have been on the books all year. But that doesn't mean it's got the more updated and the more current and any additional economic events for the day. And, we have a lot of things on the books today, like no kidding, full house. We have uh, Janet Yellen and Jerome Powell back in Congress again. We have, the president speaking today. It's going to be impactful. It is expected to see a market respond due to all of these. So, at 8:15, 9:45, 10 o'clock for a lot of these, 10:30, and then 2 o'clock with the beige book. Other than that petroleum status report, every one of these has the potential to really rock this market. So, you know, be prepared. The 8:15, I mean, the bonds open and the dollar opens in that window. So we would have already been on alert there. But PMI at 9:45, construction at 10, you know, Powell, we're not really expecting him to say anything about policy or, anything like that. And yet we saw yesterday that the market absorbed his tone and his perception of the current situation as a shift in stance, right? And they really parse every single word that man says. And it could happen again today. Whether he deliberately tried to project a new stance or not, it was taken that way. He may try to unwind or retrace or take back what he said yesterday in some way, or he may double down on it today. That'd be something we want to keep our eye out for and just kind of let it play out. And all right, so it's a full house, right? Got a lot of things on the books. 8:15, 9:45, 10, 10:30, and 2. Now, again, that petroleum status, I worked in the oil field for 20 years of my life working on drilling rigs. I don't see this as too impactful on its own. And I connect that to saying on its own because energy and finance have been tightly correlated all year. And there is a real big battle going on right now between OPEC and the oil producing nations and supply and demand and an argument about cost. Don't leave anything to chance. If you're not in a trade at 10 and 15 or 10:20 and you're thinking you want to get into a trade, why not let that report come out and then get a trade, right? If you're already in one, maybe you want to tighten up your stops, take a little bit of profit off the table, be ready to see a market react. All right. We're well below the weekly expected move, kind of sitting in the middle of nowhere. Structure wise, we actually didn't find structure yesterday. I kind of thought we would, but we missed it by a wee bit. The other day, there were a lot of people that were asking about a dead cat bounce. What is that, and what does it look like? And well, when you have a market heading to the downside and it pulls back before continuing to head to the downside, that is a dead cat bounce. Of course, we didn't get much follow through. Yeah, you can see the markets have buoyed in the overnight hours. Some of that has to do with the statements from the World Health Organization. Some of it has to do with OPEC statements. You can see we're mainly mostly riding above that orange line, which is my 50 period moving average. We are still inside of yesterday's price action. When we scale out a little bit, you can see that we've just been right here for a while, right? 1, 2, 3 days. And it's very likely that we're going to spend most of our day inside of this because we're already up 1.25%. Right now, we have an average daily range of 1%, and we're above that. Now, we already know that if today was to be a good, clean, strong, bullish day, that a 1.25% is nothing, and we could easily make another 1% on top of that. A 2% move would be my expectation, right? So from our current location, if we was to add 0.75%, that'd put us around 58. If you're looking at that line that I just drew and you're thinking, yeah, no way, that's too far. It's not too far. But to get there, we're going to have to deal with yesterday's intraday highest price. Right now, I make that distinction between the intraday, the RTH high, and just straight up yesterday's high, because Globex would be counted in that. Right. But this is going to be an institutional pivot point that needs to be resolved. And yesterday's open is a place that needs to be resolved. The open has a lot of power that most people don't even bother to mark out. But when we revisit that area, it is often impactful. So resistance, resistance, resistance. Hey, we finally broke through it. Maybe it's support now. It's the first line that I mark when the bell rings every day. All right, so we've talked about the upside move. What if the market doesn't like what it hears today? Or they take so long saying it that we really don't get anything good? Well, then there is the alternative thesis, which would be that we just maintain our Globex range from Globex low to Globex high. That's a relatively decent range. It's more than 1.25, right? So we could easily just stay right inside of that range, which would keep us inside of yesterday's price action. It would give us an inside day, right? Multiple days in a row of inside days. Now, everything's been controlled by this big bar back here. That is the leader in all of this mess. as the controlling candle. We're inside candle 3 days now from that one. However, inside days are more impactful when they are very tight days, when they are very small and very compressed, and then inside days, not this big monster bar and then a bunch of bars inside of it. But we are still inside that range. It's very likely that we're going to maintain our own Globex range. And if things start to get rowdy, then the expectation would be that we come down and check that weekly expected move by maybe tomorrow morning or say Thursday by the close if the market doesn't like what's on the books today. At the very least, we could easily give back our 1% and come back down to retest the lows. And then from that, another 1% to the downside. 4,500 would be my target if things start to get negative. And you'll know if things start to get negative because as you're going to see in a few minutes when I go over to TradingView, a lot of the market is up this morning. We're feeling very bullish out there. The news is bullish. The commentary is bullish. There's a lot of exuberance. Now, whether that lasts into the open remains to be seen because we do have those economic events on the table. You see, the NASDAQ here is got an opportunity to leave this range after many days in a row. It's a few more days than the S&P's range. The S&P actually dropped down into a new zone and then set a range for a few days, whereas the NASDAQ dropped down sooner than that, right? Last Monday and into Tuesday, and it's been in that zone since then. Even the head and shoulders, which played out, just brought us right back up to the range again. Now we're already up 1.5%, but it has an ADR of 1.5%. So we've made all of that ADR. If it was to be a good, strong, bullish day, we could double that ADR, which would be another 1.5% from our current location. It's not likely, but tech led the decline, which is why it got down into this zone faster than the ES did. And it's very likely that tech will lead us out of this decline as well. A break to the upside will challenge yesterday's high. That'll get us straight out of the box. There will be a major pivot point right there, and anything else is fine, right? Should be able to travel through that zone relatively quickly. Even if we were to turn on the volume profile, you would find it very shallow in that area. So not a lot of volume node resistance either. From our current location, if we were to try to add just double the ADR, $16,550, which would be right underneath that pivot point anyways. It's very likely that we won't leave this range and we're just going to stay inside of it and come right back down again. There are a lot of things on the agenda today. I was going through the MOC of yesterday. The sell side on the MOC was 293 and the buy side was 148. And I thought, well, with such big numbers, there had to be something in there on some kind of sector rotation. Well, when I went through and looked, it was across the board buying and across the board selling. There was no sector that stood out. So it's not necessarily like a capital rotation. It's just straight up a lot of strange things going on out there. They are trying to reprice the Fed hike, right? Because they were going to aim for late 2022, and now it seems like they're going to be speeding up the pace of the taper. And if they speed up the pace of the taper, then they may raise rates quicker. Who has a mouthful? So instead of late 2022, maybe early 2022, and that's causing them to readjust what they were pricing in for the later half. It's liable to be very choppy out there, guys. It's one of the reasons why the swing trade watch lists that we've been looking at are very short duration swing trade watch lists. Can't commit to a longer term trade when the institutions themselves can't commit to anything, right? They are readjusting. I'm willing to stand on the side and watch them readjust and then participate afterwards. Doesn't mean we won't trade. Just change our duration, right? Change our time frame. No worries. All right, so you can see the dollar is flat. We got a whole lot of nothing here, and that's not really a bad thing after that move yesterday. It was significant. And if you missed that, if you didn't see what was going on yesterday, then you're not using your tools. You want to keep your eye on the dollar. It's a great heads up. This thing made significant moves yesterday. Now it's calming down. It's back inside the range. It is not out of line at this point, very tight, consolidated. Keep your eye on this thing. We want to make sure that it doesn't start getting wild and crazy. Right now, it doesn't necessarily have to stay in this range. We just don't want to see this kind of action. Notice the bonds yesterday. This is the 30-year. Got a whole lot of nothing. Now we are fading out a little bit now, kind of easing back off of it, and that's fine. There's nothing, too extreme on that point of view. Just realize how much the bonds didn't react to the dollar. Right? That's kind of the thing that really stood out to me. The bonds shrugged that dollar off like it was nothing. When we bring it out to the larger time frame, you can see that the trend is still intact. We haven't broke over. Another way you could do that is to use the R, right? The line with the R regression line. Now it will put you on the candle spot. So you don't have to try to zoom in or do anything like that. Just start at the left and then just drag it across. Notice how it's lining up on its own. I don't have to do anything. Just drag it to the right, click. Linear regression. The downward trend is still intact. We had built a base. It looked like we were going to come out of that base and then it just stalled out. It's fine. Not a big deal. We want to keep our eye on this thing. It needs to maintain greater than this low. We don't want to see an institutional low lower than that. And I would argue not lower than 15.3, right? 157.13. The bonds and the dollar are what we really want to be watching right now. It is going to be the signal, the warning, the heads up. There is a serious capital rotation going on in the marketplace. And it's across the board in everything. So the only heads up you're really going to get is right in here. So here are the sectors this morning. You can see that everything is green. Airlines are up 2%. Cloud computing, emerging markets, which is the tool that I use for like global risk. If we are risk on, this thing is usually a positive. And when you can see we're up more than 1.5% this morning. So it's bullish out there. Everything is really buoyed, exuberant, chatty. Everybody's happy, is really bullish in sentiment. Whether that sentiment lasts or not is entirely dependent on all of the news that is coming out today, the economic news. So continue to reach back and ask the question, am I still in the same market that I was earlier? Because this thing can change today very, very quickly, right? That pullback that you're looking at may not be a pullback. It may be a market changing direction. We do have finance up more than 1.5%. We always need at least one of these two, right? Finance and tech. One of those, one needs to be flat and the other one needs to be bullish, or both need to be bullish. Tech is up more than a 1.25, and finance is up more than 1.5. We need to maintain at least one of those two. And the fact that we got both of them is a really good deal. There was a lot of consumer discretionary on the sell side MOC yesterday. A lot. Keep your eye on that side. Tesla fits into consumer discretionary. I'm not saying anything about Tesla, just pointing out that, it's in there. So when we start going through and looking at the sectors, the names in these sectors are the play of the day, right? You can still do what we've been doing for the last 2 days and run your scans, but today you don't have to be that stock picker, that you can go in and lean against the sectors. If you did want to just run your own stocks, the weekly options lists, I have to scroll a long way before I run out of names that are up at least 1%. That's a really good thing, by the way, right? We want to see, these are 600 names total, and I have to scroll a long way to get through enough names to start seeing something that is less than 1%. When we start looking at the sectors by subsector or their industry, airlines is up, the chip sectors are up, everything's up, right? Crypto, electric vehicles, even the pot stocks are up this morning. All right, so here's trading view, S&P 500. We want to change this to pre-market change percent. Turn on the filter, try to hit it close to 100 names. Ah, haven't been so lucky in the last few days. I'm going to leave it at 115. It's close enough. Health services looks a little rough. Other than that, things are looking really good. On electronic technology, we got a few names that stand out. The FANG names are looking really good this morning. For this one, we want the NASDAQ 100, pre-market change, no filter needed. Adjust the color scheme a little bit. Transportation is off, commercial services is flat, distribution and utilities. These are all more of like a defensive sector, right? Not transportation necessarily, but you see we don't have money in this area this morning. Consumer durables, production manufacturing, which by the way, with that economic data, keep your eye on these. Technology services, that one's worth expanding a little bit. Kind of a mixed bag of goods in here today. And the subsector that puts Facebook and Google in here and PayPal, I don't get how they I don't get how they can justify that, but whatever. There it is. Not even going to go down that rabbit hole today. All right. This is filtered asking the question, how many names in the NASDAQ 100 are up at least 1%? 50. Half the NASDAQ is up more than 1% this morning. That's bullish, guys. That's just straight up bullish. S&P 100. How many names in the S&P 100 are up at least 1%? 60% of the S&P is up more than 1% this morning. It is very likely that we are primed for a trend day, but I'm going to put the little asterisks on there and point out that if we are inside of yesterday's price action, we cannot have one of our trend days that we've been studying, trend day number one, right? The morning trend, we break and open. We can't have one of those if the move is inside of yesterday's price. Just like this back here. Beautiful trend, not one of our trend days. So if the NASDAQ opens near the high of its own Globex, it has the potential to reach trend day status. All it has to do is break out of yesterday's price action. And I say that, but it's already up more than 1.25, more than almost 1.5. Even just to get to yesterday's high, you're looking at another $60 move, $70 move. So could we have a very clean, very beautiful, very strong trending price? Absolutely, yes. Will it be one of our trend days? Not if it's still sitting inside of yesterday's price action. And for the ES, you can see that that distance to travel is even farther. We're already up more than 1.25, way past our ADR already, and we would have to get all the way up to 4668 before we are outside of yesterday's price. That doesn't mean that we can't have a good, clean, strong trending market, just that we can't call it a trend day. So this is very bullish. Keep referring back and looking at the names that are up in the pre-market. I like to pick sectors that got really beat down and find my opportunities there. If we find names in a sector that have not yet really popped and they're just going to open right where they closed yesterday, but their peers have already started running. That's like the gold mine find right there, right? Just for a rough example, if you see that the Dollar Tree, the dollar store, and Target and Costco have all started to run in the pre-market, but Walmart hasn't, and we open and Walmart is just sideways and suddenly starts to take off, that's your play of the day, right? Everybody else is already up more than 1%. Walmart opens flat and runs to catch up with them and gives you that 1%. It's a rare find, right? Energy, airlines, emerging markets, finance and technology, all at the top of the list. Growth versus value. That's what I got, guys. Be careful, be safe, have a good day, and I will see you all at the live stream this morning at 9:15.